rarely see a 10%, 12% drop.
And welcome back, David Smeriglio. The last podcast we did was a smashing success. People seem to resonate with you. Glad to have you back again.
Thanks, Rick. Yeah, it was fun last time, and it must be all my incredible insight,
Yes,
my predictive abilities.
for sure. So today I wanted to discuss, what's going on in real estate. A lot of people in the GTA are wondering, what's going on, where are things going to settle. We got a lot of things going on. We've got CPI, rising prices, inflation. We've got mortgage rates, interest rates going bananas. Possible talk of even 0.75% increase coming up June 1st. What's your views here? The whole psychology of buyers and sellers out there at this time.
I'll approach that from my perspective as a real estate agent, which I think is could be valuable. I could say that in the last 2 weeks or 3 weeks, you could kind of feel like you're in the real world of real estate again, right? Because for so long it was like, we were so skewed in one direction for such a long period of time. So you bought and then you sold. Most of the public was trying to buy first and then sell, as we discussed in the previous podcast, because it was very kind of dangerous to sell first, because the market was moving so quickly that the prices of what you wanted to buy could be higher as after you sold, right? So
right.
A couple of months to sell, then you could be behind the eight ball, so to speak, so to speak. So, but so in that respect, things are starting to balance from a real estate perspective, meaning there's you have to now look at the product that you're selling and say, is there a market for this? The price has to be kind of spot on where it needs to be versus some random number like let's list $300,000 or $400,000 in value and just have 20 people come in and bid for it. Those days are dwindling. Not
Right.
to say that it's not going on; it's still going on. But now there's we are in this time period where for sellers, the shock of not being in that crazy peak that we were in January and February is becoming a reality. So the denial period is starting to dissipate.
Funny you mentioned that, because just in the street behind me, I've got someone that is listing a detached house. They've listed it for 2.15 million. It's been on the market for now about 40 days. That house there, based on the prices of houses that have sold in the area, I think should be closer to 1.7, 1.8. I mean, talk about what you just said, denial.
Well, when you say 1.7, 1.8, do you mean even at the peak, or do you mean based on what recently has sold?
Good question. I was just looking at something. For example, what I did is, looked at something that sold a couple of months back. That was a bigger house, and that house that sold for 2.1 million a couple of months ago was much bigger, nicer house, bigger lot, and that sold for 2.1 million. So this one being, about 800 square feet smaller, and they're trying to get 2.15. I just found it a little absurd.
Yeah, so that could be a situation where maybe it is absurd. Maybe they're just looking for too much money right off the bat.
Yeah.
But generally speaking, what I'm noticing more of is those houses that are hanging on to what would be considered peak prices. So if we now that we have enough aggregate data in for January, February, and March, back in February you would get 10 people bidding for a house. All of a sudden it went down to like 4 or 5.
Oh,
right? Just kind of overnight, and as the month of March went further on, that it started to become 3 to 4, three to
yeah.
five. It started to become, rather than 10, it'd be 5, so it almost halved, right? And then in April, I started noticing some conditional offers coming through that I hadn't seen for a very long time. So that line, you did not see that in January, you did not see that in February. Now, you start seeing that in March and April.
Definitely looks like things are shifting, and I could only put myself in a seller's shoes. It's kind of, if, for example, if only a month or two ago, let's say, that actually sold for like 1.5 million, let's say, and now all of a sudden the reality is that I can only get 1.37, let's say. It kind of stings a little bit to say, well, it just sold for that. I want to be able to get the same as my neighbor just got 2 months ago, so I can. It's tough now, but at the same time, depends what I'm doing. If I'm going out and upsizing it and buying another house, well, then I'm maybe getting that house for that much cheaper.
Right. So that is a really good point that you're bringing up, because that is where we're going to see how the market settles. So what I mean by that is, you'll see a house come up, or I've seen houses come up that clearly are still at the prices that maybe are, again, not at the peak, but kind of near the end of the peak kind of numbers, right? So, and they're sitting there and they're not selling. So the question that comes to mind is, what is the situation? Is a situation that they bought already? Because if you go back 2 months, as I mentioned earlier, everybody was buying first. Well, not everybody, that's an overstatement, but the majority of people were buying first. It was the right thing to do. So if you were kind of the last people to buy in February and March, you could be in a situation where now you really need to hang on as long as possible to sell your house, because you bought at whatever the percentage is higher in March than it is right now. So that could be an issue. And we saw this in 2017 when the market started to go down. One of the caveats to that is that even if somebody comes along and loves your house and you have it at a higher price, the next thing that's going to start happening, and I like to talk to some appraisers about this, is, are the houses going to appraise? Because if the overall market is trending that it's whatever percentage that we're going to find out it's gone down overall, and then all of a sudden your house, somebody says, oh, I love it, and gives you the money that it was worth 2 months ago, and then you go to appraise that house, and the appraiser says, no, this house isn't worth 2 million, it's worth 1.7 million or 1.8 million.
Right.
That poses a problem, because the bank will only lend up to what the appraiser has appraised it at. So and then you got to come out with the rest out of pocket, which, how people go about doing that is something that a mortgage broker like Marco, that's a great question for Marco, to say how people are going to deal with the things that aren't appraising. Now, I haven't heard, within the realtor community that there's been a lot of stuff that are, like you're saying, stuff with houses that are not appraised. But that is kind of what happened in 2017, when there was a quick drop after the change in the qualification.
That makes sense. So you're saying, so this buyer might like my house and offer what I want, let's say that 1.5 million, but then they go to qualify for the mortgage, the house gets appraised at, let's say 1.35, and now all of a sudden they can't borrow as much money, so they may not be able to actually come up with the financing to get it.
A little bit of a danger there, right? So you might start seeing, an offer, like nobody, like for the last couple of years, we've seen offers with no conditions at all, no finance condition, no home inspection condition,
right?
And with the market trending upwards, most I didn't hear many people not getting their mortgages. There was a lot of work done before offers were submitted to ensure that people could afford, knew exactly what they could afford,
right,
before they went in. So there was not a lot of houses that didn't close, essentially.
Gotcha.
They're going to get financing. Heard a couple of nightmare stories about home inspections, but for the most part, it's been pretty good. But now we're in a position where I actually was in a listing presentation last night, and I had to say to my clients, it may not be a bad idea at this point. To get an offer that has the condition of finances, so that they can do their appraisal right up front. Right. So take a few days, get the appraiser in here. Let's verify that it appraises and then close the deal, right? Which means that there's a bit of a waiting period, but it's kind of a little bit of a safety mechanism while the market is readjusting. The last thing you want is somebody to say, "Yeah, I love your house," and then they buy it, and then they say, "Oh, sorry, we can't come up with that extra $150,000 or whatever it is that bridges the gap between what you paid for it and what it's been appraised at." Right.
Exactly. And I think that kind of advice, is what makes the difference a lot of times between, a good realtor and a great realtor such as yourself, is being able to provide that honest feedback and, guide people in that regard. So that is, that's fantastic.
Well, thanks for the kind words.
I do have a question, things that I've been noticing lately, some of the articles, some of the other videos and titles that I've been seeing out there, real estate down 29%. Now, does that actually mean that, real estate prices across the GTA are down 30%? Or are they talking about sales listings? I find that there needs to be clarification on that.
Well, I'd be surprised if that's volume of listings, because volumes of listings is definitely up.
Okay.
There's no doubt about that. 30%. It's like I said in the last time I was on, I say to people all the time, like you can look at the whole of the GTA, and where did that expand to? Does that go all the way to Vaughan and Oshawa and over to Hamilton? Like, what is the GTA? Like, the GTA is so huge, and a sweeping 30% across would be catastrophic. Like, that's a huge amount. Like, you think about that in real numbers. Your house is worth $2 million, now it's worth 1.4, right?
Yeah.
What? Like, it's a even in the maddest market that we've ever seen, it took 2 years to go up, or a year and a half to go up 30%. And all of a sudden, a month it drops. Last night I happened to be in Milton, and so for the last couple of days I've been looking at the statistics for Milton, and I have seen some pretty drastic number changes. Not necessarily 30%. That would have been kind of shocking, but I could clearly see a 10%, 12% drop in the houses that I looked at. So I looked in the small detached and semi-detached market over the last couple of days. So what I did is I compared, January and February.
Right.
Okay. And I was lucky enough to find enough listings in that time that were comparable, within a certain square footage range.
Yeah.
A semi-detached, you probably look at a well-appointed semi-detached on a decent lot. You'd probably be looking at about 1.25 million.
Right.
And you could be as much as 10-12% down from that, based on what's listed and what's sold recently.
Oh wow. So just in a couple of months for that semi-detached in Milton, for example, in the area anyway that you were looking at, a buyer that's now coming in could possibly, will be potentially saving here about $125,000.
Absolutely, and but let's be clear though, and this is where the sticking point is going to come.
Right.
When I compared that to the highest market you've ever seen.
Right, ever. That's right.
Ever.
Yeah.
So if you just take so if I went back 2 months from that, November and December, or let's just say the fall.
Yeah.
It wouldn't be that drastic.
What should I be doing right now? Like, should I rent? Should I hold off longer? Should I buy now? Should I wait? What's your opinion on that?
That's a tough question. It is because I guess it depends how I guess ultimately you're right. It's like, how long are you in the market, right? And
Yeah.
As you had in your last guest, Marco was speaking to. I mean, if you look at the growth over time, it's pretty strong. So if you try to time it, like, how long are you going to when are you pulling the plug on? Okay, it's settled down, right? And then you've also got rising interest rates that you're dealing with, right?
Yeah.
So from an investor point of view, let's say you're buying a condo and it's $500,000.
Yeah.
Mississauga or something of that nature there, and you put down 20%. Waiting for it to go down to 450,000. You're borrowing $50,000 less, but at the same time, right now, rental rates are pretty strong, right? So like, you wait to save $50,000, and then interest rates go up, and rental rates might drop a little bit, right? So it's kind of like you're playing with all these, juggling all these balls in the air, trying to figure out, like, so unless it's something catastrophic where it goes, I waited and it went from 500,000 to 250,000, which is a 50% drop,
right?
Then yeah, you did great, right? And your down payment's a lot less, and you're in a great situation. But if it doesn't, and it just levels out by 10 to 15%, I don't know how much you've gained by waiting a year, when you start saying, okay, when interest rates might be up, you've paid money in rent. How much have you really saved by just moving on with your life, and paying that extra $150 a month?
I look at it from one perspective. If you are getting an investment and you analyze all the numbers, and for example, you could break even now that it's getting a little bit more balanced, and you're in it for the long term, like you're not trying to flip it in a few months, then it still might be a sound investment. And then guess what? If you continue to build up, and your idea is to build up a bit of a portfolio, and then let's say in, I don't know, a year down the road, a year and a half, prices are indeed, let's say 15%, 20% lower, well, doesn't prevent you from either partnering up, or maybe you've saved up enough and now you move on to investment number two, almost like a dollar cost averaging approach in a sense there, but applied to the real estate market.
Yeah, no, exactly. And and this is why we've been for years been discussing this stuff, and I defer to you to actually start to look at the minutia of what the positive aspects of investing are, right? Ultimately, as a real estate agent, my job is, you tell me what to do for you, and I'll make sure that you're doing it within the right parameters in the right way, right?
There's some situations where people might be living, again, have the fortune of actually living and not even paying rent, living with their parents. They've got a great job, making lots of money, but they're partying it up, they're spending money, they're buying the fancy toys, and they're just not saving anything. It'd be nice to take advantage of that and balance things out. Yes, have fun, but perhaps start tucking some money aside. A great opportunity to be blessed with that situation of living rent free, for example, and tucking away a nice little nice deposit, and then at the right time, when you've got enough of a deposit built up and you can qualify, engaging someone like yourself to kind of go out there and get something that makes sense for them. Even if they start out small, at least they're starting to build equity.
How does the new generation that you're talking about, not blowing money on frivolous things, right? Because they have to live. Like, I have a 17-year-old daughter, and I don't want her to it'd be quite incredible if she started saving to buy, her first property at 21 years old. She'll probably still be in school at that point, so I don't expect that. But she might get, even if, the head on her shoulder is solid, get to the point where she's 23 years old, and the condo costs $600,000, right?
Yes.
And it's just so beyond her entry level job that, like Mark, what was that statistic that you guys spoke about last time, that you need to be earning $31 an hour at a full-time week in order to get the entry level house in the GTA at the moment? Right?
Yes.
That's unrealistic for people in their early 20s and whatnot. So I think at some point we need to have a show to say, okay, well, what is the next investment / ownership vehicle that's going to be available, or how are buyers going to be structured, coming up? How is my daughter and your sons, how are they going to work? Are they going to be maybe working together to buy a place? Are they going to be, instead of buying, one person going and buying a condo like Marco did, 4 people going and buying a 3,000 square foot house or something, and sharing it, or something of that nature there, where there's you still have accommodation, but it's like buying in bulk, It's like, it's like the buying in bulk version of buying a house, right? Because those 4 600 square foot condos, might be 2.8 million, but that 2,800 or 3,000 square foot house might only be 2.1 million.
Right. Yeah.
And they could divide it up, and anyway, that's a topic for another day. But that's when we're talking about real estate, there's the sales angle of it, but there's what interests me and why I talk with people like yourself, and Marco, and all the other people that we talk to that make a part of our team, so to speak, is because it's not just about the sale. It's about housing, right? The right housing for people, so they could flourish. You mentioned something at the end of your last podcast with Marco that you said, just give him a call and then Marco will buy you the coffee. I have to say, Rick, like if I'm going out to meet somebody for coffee for advice, I like a coffee bought for me.
Yeah, okay, that's fair.
And I do Americano. I do an Americano. That's all I ask for. Free advice for the Americano. It costs you $3.40.
Oh cow, the expensive kind. You won't settle for a Timmy's. You got to go for Starbucks, eh?
Wait a second. No, Timmy's is like $2.40. It's not like half price anymore.
Okay, yeah, they're not that far off anymore. Hope that helped. Love to share this free information. Your only cost is a free subscribe and a free like. So if you would do me that kind favor, I greatly appreciate it, so I could bring more of this content to more people, helping you to build your wealth. Bye for now.